Welcome back friends to the class number 76, and in this video we will discuss the concept of working capital demand loan, that is WCDL. I have already explained to you the concept of seasonal limits, peak limits, cash credit limit, overdraft limit. Now we are adding another facility in our portfolio of working capital products, that is WCDL, right? So this WCDL is generally, not always, generally given as sub limit of cash credit or overdraft limit, right? But it can be given as separate facility also, separate limit also. If it is given as separate limit, then it functions more like the seasonal limit concept that we have discussed in the previous video. So I am not gonna explain to you the concept of seasonal limit again. So remember, if WCDL is given as a separate limit, then it works more or less like a seasonal limit, right? So I am explaining this video when the WCDL is given as a sublimit of CC and OD. What is the benefit for it of it for the entrepreneur and for the banker, and why it is done? I will explain all that in this video. So what are the key features of WCDL? So it enjoys a slightly lower rate of interest than regular CC and OD, slightly 15 BPS or 0.15% or 0.10% rate or 0.25% rate is lower than normal CC and OD. If your CC and OD is running, for example, at 8.5% rate of interest, then WCDL may be given to you at 8.25%, right? So it enjoys a low rate of interest. That is why it is very popular from the point of view of entrepreneurs and MSMEs, because they get the facility, they get to use the borrowed funds at comparatively lower rate of interest. So it is allowed to you for 90 to 180 days period generally, right? It can be for 365 days also, but that is a very rare case phenomena. So monthly interest is charged on WCDL loan, right? Monthly interest is charged, and that interest is charged in your CC and OD account only. I will explain to you how, right? So at the end of the tenure, when your 90 days or 180 days expires, you have to make the payment in full of WCDL amount. Of the principal amount is paid in full. Only the monthly interest is given by you, but at the end of the tenure, all the principal amount is paid back in full. So it is called bullet repayment, right? So now we will understand how WCDL works, how this facility benefits both entrepreneurs and the bankers. So suppose your banker has given you cash credit limit of rupees 100 lakhs at 9.25% rate of interest. Now you have also been allowed WCDL facility of rupees 80 lakhs as a sublimit of cash credit limit at 9.1% rate of interest, right? So it is part of cash credit limit only. So you assess cash credit limit basis MPBF basis turnover method. So since it is given as a sublimit of cash credit limit, it automatically gets assessed by way of MPBF and by way of your operating cycle or your turnover method, right? So if you have seen in this example, I have not given 100% interchangeability of CC limit and WCDL limit. I have kept CC limit 100 lakhs and WCDL limit 80% of CC limit. I have done that intentionally because this is what actual practice followed in majority of the banks. Most of the banks keeps the WCDL limits as 80% of the parent limit. Not, they don't give WCDL of 100% interchangeability. For example, they don't sanction you WCDL of rupees 100 lakhs generally, right? They can do so. Some banks are doing, but generally it is not done. Generally, it is kept around 80% of your parent cash credit or overdraft limit. And why it is done? Because if you choose to avail WCDL 100%, right? So you will enjoy technically only 9.51% ROI. So this 9.25% ROI will not have any meaning for the banker. So that is why, in order to keep some parity between these rate of interest, some bankers don't give 100% interchangeability between cash credit and WCDL. So how this WCDL works? Suppose this is your cash credit account, and on 31st August 2025 you have 100 lakhs limit, 100 lakh limit which is fully used. You have 100 lakh limit and the limit is fully used, and you are paying 9.25% rate of interest on that 100 lakh rupees as a borrower. because 9.25% is your approved rate and your limit is fully used, and you are paying 9.25% rate of interest on that 100 lakh rupees, right? So the banks have now allowed you 80 lakh rupees facility at 9.1% ROI. Now what will you do? You will submit a request letter sharing your intention, asking your bank to give you WCDL facility of rupees 80 lakh, right? Suppose for 60 days period, you are asking for 60 days tenure, right? So what will happen on receipt of your request letter, banks will take 1 day to process, and suppose on 1st September 2025 banks have processed your request and have opened a separate WCDL account in which banks have given you 80 lakh rupees worth of loan. That is, now your WCDL limit used is 80 lakh rupees, right? So that 80 lakh which is given to you will go straight in your CC account with the entry of WCDL disbursed, and 80 lakh rupees will get credited in your CC account, and now your CC limit will have utilization of rupees 20 lakh rupees only, right? So now you will pay 9.25% rate of interest on 20 lakh rupees and 9.1% rate of interest on 80 lakh rupees. Earlier you were paying 9.25% on total 100 lakh rupees. So you are practically saving 0.15% rate on your 80 lakh rupees. That is the benefit of WCDL for you, right? So the WCDL gets disbursed. So the CC limit used is now 20 lakh rupees. Remember friends, there cannot be any credits in your WCDL account. It is a one-time demand loan account which is opened for disbursement, and there can be another entry which is for its repayment on the due date, right? You cannot ask your customers to pay your sale. Suppose you have sold goods to Mr. A and you cannot ask Mr. A to pay you money in WCDL account. The money will always be received in your cash credit or overdraft account. So suppose I am simplifying the example. 1st September WCDL is disbursed, and now what will happen on 30th September? You will be charged interest on WCDL in your CC account only. That interest at 9.1% on 80 lakh rupees will be charged in the CC account, right? And a separate interest will be charged for these 20 lakh rupees limit also on 30th September. So two interests will be charged in the CC account on 30th September. And similarly on 31st October also, two interests will be charged, one for WCDL and one for CC limit. And now at the end of the tenure, after 60 days period, your WCDL will be paid off. What will happen? CC limit account will be automatically get debited for 80 lakh rupees, and utilization will become 100 lakh rupees again. And that 80 lakh rupees, friends, will get transferred to your WCDL account, and your account will get squared off after 60 days period. So you don't have to arrange any funds for that, because these transactions automatically happen through your CC account only, right? So now this WCDL is paid off, it is squared off. Now if you want to avail WCDL again, then you have to submit the request letter again, and then separate WCDL account shall be opened for that, right? There shall not be any requirement of any application form signing or document signing for opening that account. This is internal process, internal monitoring mechanism of the bank. So it is opened internally in the banks, right? You don't even get the statements of WCDL accounts from the banks, right? So now what are the benefits of WCDL? Let us understand from the borrower point of view. First of all, you are saving rate of interest like we have understood in the example, right? So practically speaking, when should you use WCDL as a borrower? So suppose you have used limit of rupees 100 lakhs. Now you have submitted the request of WCDL for 60 days period of 80 lakh rupees, right? So friends, you must be sure that for the next 60 days, your CC limit should not, you would not have used CC limit below 80 lakh rupees. Suppose you have seasonal business, and on 31st August, your CC limit is 100 lakh rupees, and you are expecting on 15th September 2025, you are expecting 1 crore rupees payment from your party, right? If you receive 1 crore rupees payment from your party on 15th September, then your CC limit utilization shall become technically zero on 15th September, right? So in that scenario, keeping this in mind, if you submit request of WCDL, if you submit request for WCDL for 60 days period, then you have to pay 80 interest on that 80 lakh rupees sure shot for next 80 days 60 days period. Even if your amount, if you even if you receive 1 crore rupees on 15th September and your limit gets into credit, still you would have to pay interest on this 80 lakh rupees. So that is why you have to be very sure that before availing WCDL, you have to be sure that this much of amount which you are availing as WCDL shall remain utilized for next 60 days. Only then the WCDL shall be beneficial for you, right? So if the WCDL is given for 80 lakh rupees, then it doesn't mean that you cannot take WCDL below 80 lakh rupees. Suppose you think that your utilization shall remain 20 lakh rupees bare minimum for next 20 days, then you can submit the request for 20 lakhs disbursement also. You can ask the bank to give you WCDL of 20 lakh also. So 80 lakhs is the maximum capping. Out of that 80 lakh, how much you want to use, it's purely dependent upon your personal choice and requirement. So lower ROI and use only when you are sure that this much of minimum utilization shall remain in the next 60 days, 90 days or 180 days. So what is the benefit for the bankers? You are getting lower ROI, bankers are earning less. What is the benefit for the banker? The benefit for the banker is that since that 80 lakh rupees is booked for next 60 days, now bankers are sure that they will earn money on that 80 lakh in next 60 days at 9.1%. Income guarantee is the benefit for the bankers, right? So since it has lower ROI, banks usually don't give full interchangeability, that I have already explained to you, and its assessment is also based on MPF and working capital cycle like CC and OD that I have also explained to you. So this is WCDL product, and in the next video we will consider the impact of OD limit, seasonal limit and WCDL limit in the drawing power calculations. Thank you very much.